guys? Welcome to Market Marauders. Beating the market one trade at a time. Make sure you hit that subscribe button down below. Like, comment, share. So let's dive into it. So today, Netflix had their earnings. Today they ended at 338.11, which is a pretty good price. Uh, they've been on a pretty good run so far. They're above their moving average 50, which is 315.84, and above their moving average 200, which is 332.08. So, that's always a good sign. Diving into this, we can see that, you know, they started off, the bottom of September, they had um, a little lull. So, about from July, around July 4th, they dipped down all the way until about the end of September. And then they started to break out and go back up to where they're at now, which is 338.11. So it's a pretty good thing, and we'll see if this breakout will continue. I believe it will. So let's dive into that. So moving forward, let's also remember that November 12th was when Disney Plus was released. So just keep that into a consideration. Their last earnings was around October. So it was right around the time when, right before Disney Plus was released. So, this is going to show basically the effects of Disney Plus on the company. So let's dive into their financials for Q4. So if we look at it, it says we had a strong finish to 2019 with Q4 revenue growing 31% year over year, bringing full year 2019 revenue to over 20 billion. So 20 billion is a pretty large number, in my opinion. I think it's fantastic that the company is doing these type of numbers, and it just shows the growth of the company long term. It also says while FY19 operating income rose 62% to 2.6 billion, that is a really large increase. 62% is a really large increase for any company to grow. So showing the fact that Netflix has increased 62% just shows their power to grow the company long term, and you know not really focus on the competition, basically destroy the competition. Uh, so it says during the quarter we surpassed 100 million paid memberships outside of the U.S. Streaming entertainment is global phenomenon, and we're looking forward uh, and we're working hard to build on our early progress. So basically, their model is, go outside of the U.S. for membership, global expansion. Every company wants to be a global company, but they're basically showing, they have a plan to do that. And it also shows with the numbers. So if we look at their revenue in quarter three, it was 552.45, and in quarter four, it was 54.67. So there was definitely a really large increase in their revenue. Now, whether that was due to the fact that they had this expansion and they had this 100 million paid memberships outside of the U.S., it may be a factor, but who really knows on that one? I think that the 100 million paid memberships outside of the U.S. had a large factor when it comes into uh, how much revenue they had, because that's a lot of people outside the U.S. that are using Netflix, and Netflix isn't a small company. It's not a small company name. Everyone really knows about it, so people in other countries are probably excited to have it and be able to access it. So if we look at their year-over-year growth in quarter three, it went to 30.6%, and in quarter three it was 31.1%, and in quarter four it was 30.6%. So it went down a little bit. Um, you know, I expect that to happen, uh, especially with all the stuff that was going on in the news with the Disney Plus, and people are going to go and use another service. That's just the way business works. People are going to test it out, but I definitely expected that year over year growth number to be percentage to be a lot smaller. Um, you know, as the transition from quarter three to quarter four. So that's a good thing that it's not that big of a gap. And if we see from quarter four 2018 to quarter four of 2019, it's definitely steadily increased. So that's always a good thing. Their operating income decreased to 459 from 980, which was in quarter three. Their operating margin also decreased by about 10%. Um, yeah, like 10.3%. So, that's another sign. Net income decreased to 58,587 from 665. And also their diluted EPS also decreased from 1.47 to 1.30. If we look at their global streaming pay membership, it is on a steady increase. So I think this is one of the things that they highlighted with the 100 million paid memberships outside of the U.S. If we look at their quarter three, it was 158. Well, starting from their quarter four of 2018, it was 139.26. Then it went up to 148. Then it went up to 151. Then 158. Then now 167.09. So it shows you that their business model is working in terms of growing their company overseas. Um, so it just basically shows that business model is working. Um, if we look at their year over year growth, it actually decreased. So their year over year growth has decreased since quarter four when it comes to global streaming pay memberships overseas. So it went down 20 it went down to 20% from 21.4% where it was in quarter three. And it also has been down since quarter four of last year, where it was at 25.9%. If we look at their net cash operating activities, that actually went up. So that went from 502 to 146.62. Free cash went up from 551 to 167 1670. Sorry. Adjusted EBITDA, that actually went down to 586 from 1107. And then shares pretty much stayed consistent. Streaming content obligations, went up just a little bit. So, if we go to their website, their January was jam packed with, releases of things that they were doing. It just shows that the company, is constantly, releasing new things. They have a lot of independent films that they're doing. Um, you know, and this goes to show that they're constantly working. All these releases is just different things that the company is doing, just to show viewers that hey, we're working or continuing to grow. So I think it's a positive note on that. The direction that they're moving to have international success with the growth of expanding, I think that'll turn favorable because I know a lot of people are probably looking forward to having Netflix or using Netflix or having more updates on Netflix when it comes to you know consumers in other areas. A lot of people, it's a kind of an untapped market. I think when it comes to streaming, I really don't know. I don't have expertise in that, but I believe if Netflix can get their foot in the door, then it just helps Netflix out. And if they're the first one to expand to all those different places, then it kind of puts them, in position to be the main company that can do that. And I think it's good for them to, continue with that business model, especially in lieu of growing competition in the states. Um, Most people that I know, they have like all three. So they'll have Netflix, Hulu, and Disney Plus. But you know, I don't think people are going to continue to have all three. They're probably just testing out to see which one is the best one or which one they'll like. Uh, you know, Disney Plus is kind of new. I think they have some growing to do. So I really don't think they're going to be too much of a factor moving forward when it comes to just pure competition against Netflix. They're kind of their own market, it's kind of their own niche. Netflix already has been around for a long time and has its own kind of clientele of people that already use its service. So I think moving forward, Netflix is going to continue to grow, and I think the stock price is going to continue to go up from this 338 since their Q4 was so good. So that's just my synopsis on this. These articles are online. You just search them in Google. So you guys just do your own due diligence. Make sure you guys hit that subscribe button down below. Like, comment, share, and I'll see you guys next time.